And up next here is the fixed income market, and look at the activities in that segment of the market at the close of Wednesday. We have our regular analyst on the show, John Kanayo, head research analyst, Imperial Asset Managers Limited. He joins us via the telephone now. Thank you for your time. We appreciate you once again.
Thank you, Frank, for having me this morning.
Good morning. I want us to look at the activities yesterday. You have the figures. Take us through from money market to the treasury bills and the bond market. What went down yesterday? What is the investors' position ahead of the inflation figure, which is due this weekend, and of course the MPC meeting this month?
Okay, thank you so much, Frank. The market opened yesterday, especially if you talk about system liquidity side of the market, looking at talking about the money market. System liquidity opened at 259.98 billion and closed at 251.64 billion. The opening was as at Tuesday, and the closing was as at Wednesday. That informed what happened largely in money market. Rates stay within the single-digit levels. Overnight rates, that's core rate, increased by 138 basis points to settle at 3.39%. You move upward to Omo market. Omo market was a bit bullish yesterday. We saw demand coming in, filtering into 31 May 2022. Yields declined by 30 basis points. On the average, in that sector, yield was down by 6 basis points. That shows a positive market for this sector. You move to NTB. NTB was largely quiet because of auction that happened in the market yesterday across short, mid, and long. Average yield was unchanged. From there, we moved to bond market. Bond market was marginally upward yesterday. We saw at the short end of the curve, average yield declining by a basis point. At the mid end, declined by 4 basis points. While at the long end, it appreciated by a basis point. On the average, yield settled at or dropped by 2 basis points. That equally show positive activity in this sector of the market. We quickly look at the auction that was done yesterday. Remember early yesterday morning, I pointed that there will be an NTB auction that CBN will be offering to market a total of 127.47 billion. What we saw in the market yesterday, we saw subscription size of 377.1 billion, and what was allotted was 137.86 billion. Offer was high on a 364-day tenure, that's a 1-year tenure. We saw over 200% increase in offer size compared to what was offered. Bid to offer ratio was 2.96 and bid to cover ratio was 2.74%. That shows that investor or market participants continue to pour into NTB auctions, both NTB and bond auctions, to take position of what government is offering into the market. But if you look at the short and mid end, demand was lower than what was offered. But anyway, CBN eventually offered and allotted a figure a bit lower than what it intended to, what it offered to the market.
Let me quickly comment. Why do you think the demand was lower than what was offered in the market? What informed the low appetite was seen from investors?
was lower to what was offered to the market, especially when you look at the short end. Short end was the demand was 1.37 billion compared to 1.91 billion that was offered. Stop rates, the range of rates that was offered was between 1.65 to 1.75. If you look at this rate, is lower to what the secondary market offer, and it's expected that investors are rational people, and what they do is that if they can get rates higher in the secondary market, they won't come to primary market or auction market to get a rate that is much more lower. So that really informed that. If you look at the long end of the curve or the 1 year tenor, you discover that what was offered was 122.56 billion, and what was bidded was 367.72 billion, and the stop rate was between 4.5 to 5%. And if you look at secondary market, what secondary market currently have is lower than what the long end of the auction market is offering. So that was why we saw increased bid coming into this tenor or this maturity.
Oh, okay. Okay, so there was a primary auction yesterday, so how is that changing the dynamics in the market, and going forward, how is investors reacting to the inflation figures that is due for this weekend ahead of the MPC meeting in May?
Okay, thank you very much. The offer results, what it is going to do to the market, since at the long end of the long end of the curve or the 1 year tenor, CBN has decided to drop the rate from 4.79%. It was about a fortnight ago to 4.7. We're going to see a repricing at that long end. At the short and medium end, we're not going to see a significant change. I think investors will trade on caution. Talking about expectation for April inflation and MPC meeting that will be coming about 2 weeks away from now.
Right.
Like I pointed out yesterday, inflation and yields are inversely related, and when there is expectation that inflation will be higher, investors usually play with caution. MPC is expected in line with global trend.
Right.
Nigeria MPC is expected to increase MPR, and that's monetary policy rate up. We are looking at
because currently now, just a moment. Currently, the lending rate is at 11.5%, and so should the CBN review upward in their next meeting, so what happens to investors' position in the market? Do you think it will attract them to continue to stay in the market, even though they are cautious in trading ahead of that meeting?
Yeah, we are expecting that CBN should do that. When should CBN do this? If you look at our market is, especially our bond market or our TV market, majorly somehow followed by foreign investors. And foreign investors are interested in market environment, especially emerging markets, where they could be able to get a return that is a bit either closer or higher to advanced markets. Because the monetary authorities in advanced markets, speaking to US and EU Bank of England, have increased their rates in recent meetings. What that have done to the market over there, that it makes those markets more attractive to emerging market, and the emerging market monetary authority have no business to hold back rates or to maintain rates at where they are now, other than to increase in order to make their market more attractive.
It's all right.
We have equally seen inflation, a higher inflation pressure, and the way to fight higher inflation is equally to increase rates in order to
also attract investors from other economies, right?
Yes,
okay.
Yes.
I think because of our time, we're pressed for time now. We have to end it here. Thank you so much, John Kanayo is the head research analyst at Imperial Asset Managers Limited. Thank you for your time. We appreciate you.
Thank you.